great to be back in Vancouver. I love this conference. This is one of the few conferences where you can present late in the day and see so many faces in the audience. So thanks for staying around. I too will be making some forward-looking statements. This says that we weren't here and we didn't have this conversation, right? Really quickly, our Mount Todd Gold Project is located in the Northern Territory of Australia in what the Aussies call the top end. It's about 250 kilometers south-southeast of the capital and port city of Darwin. And we enjoy the benefit of having paved roads all the way to the mine site. It's a result of the fact that this is a brownfield site that operated previously. The project itself is Australia's second largest undeveloped gold project with 10.6 million ounces of total resource. It's the largest undeveloped gold project not in the hands of a producer. Previously, those of you who were here last year and have listened to us know that we have evaluated this project as the project grew in size. We let the plant size increase to the point that for a number of years, we were contemplating a 50,000 ton per day operation with a initial capex of over $1 billion. Last year, about this time, we commenced a feasibility study to right-size the project. And in July of last year, we announced the results of a new feasibility study designed around a project that would initially be built at 15,000 tons per day with the opportunity and the ability to be expanded at appropriate times. Philosophically, we changed the way we view the project. We prioritized grade over tons. We raised the cutoff grade. I know that in this gold price environment, most people are cutting and lowering their cutoff grade. We raised the cutoff grade so that we would prioritize the best grade to the mill. We're not throwing away that lower grade material that's actually going to be put in the corner of the waste rock dump so it can be processed later. And the other thing we focused on was lowering the capex. Those were our two priorities. Jumping ahead here, I'll just digress for a moment really quickly. I know you can read this, but I think important things here. We have 126 million shares issued and outstanding. Our market cap has grown substantially since this was put together last week. Our market cap at the close of the market today is $365 million US. Our share price closed today at $2.88. We have about the same amount of cash that we had. And you see our largest shareholders off here on the right. Going back to talk about the feasibility study and the things that we changed, over on the left-hand side, you see where we were at the end of 2024. A 50,000 ton per day operation, $1 billion capex, a 0.35 cutoff, projected to produce on average 395,000 ounces of gold per year over the life of the mine. And we changed. We went to a smaller plant, but again, something that could be expanded. This allowed us to achieve a 59% reduction in initial capex. We talked about grade and over tons, and I'll talk more about that. We adopted the principle of contract mining. Now, here in North America, we love to own our own mining fleets and operate our own mining fleets. In Australia, they have a very competitive contract mining industry, and we've adopted contract mining and obtained a very competitive quote. We've always had third-party power generation. One of the things that came out of dropping to a smaller plant size is that we were able to smooth out the production schedule. Those who know the project know that in year 7 previously, our production dropped from almost 500,000 ounces down to about 200,000 ounces. Well, now we've been able to smooth that out. Our production over the first 3 years of the project is estimated to be a little north of 170,000 ounces, and then pretty constantly 150,000 ounces per year after that. And that's if we don't expand. But like I said, we expect that this project will be expanded. We also made the change to having a fly-in, fly-out workforce. We just can't solve the Catherine community's problems with housing, and so we're going to build a camp, and we will have 80 to 90% of our workforce initially will be on a fly-in, fly-out basis. So getting to the results of the feasibility study, we raised the grade. By raising the cutoff grade, the grade went up. Our previous reserve grade was 0.77 grams per ton. The average grade of feed to the mill over the first 15 years of the life of the mine is now 1.04 grams per ton. We talked a little bit about production over that same half of the life of the mine, we're anticipating 153,000 ounces of gold per year produced on average and a $425 million initial CapEx. We're reporting reserves of 5.2 million ounces. 5 million ounces of that is in the pit, and 200,000 ounces is in an existing heap leach pad, which is located right there, which will be reclaimed at the end of the mine life and will fund all of our reclamation costs. The deposit itself is right in line with the existing pit here. It's 1.6 kilometers in length. The mineralized zone varies in width between 200 and 300 meters, and it's been drilled out to 600 meters in depth. The economics, we used a $2,500 gold price. That gave us a $1.1 billion NPV5 with an almost 28% IRR. If we look at that at $3,300 an ounce, that goes to $2.2 billion and almost 45% IRR. Our all-in sustaining cost is estimated to be $1,450 over the first half of the life of the mine, $1,500 life of mine. At today's gold price, the economics are phenomenal. If you want to know the numbers, come and talk to us at our table. I'm not going to spend a lot of time here, just summarizes resources and reserves. This is the value proposition. We are located in a Tier 1 mining jurisdiction. We've demonstrated economic feasibility study. We have an achievable path to near-term production that I'm going to talk about in a moment. And when we look at other Australian producers, and these are the junior gold producers, and we look at their valuations, and we look at the size of the bubble is the number of ounces of reserves. You see that their annual production rates are in all cases lower than what our production rate is anticipated to be, and yet they enjoy market caps that are exceptional compared to what our market cap is as a developer. At the very least, we expect that as we transition from being a developer to a producer, that we'll achieve a capitalization, something on the order of a catalyst. But aspirationally, we think we should be up here with Capricorn and Genesis. That's the value proposition. And how do we get there? Well, we drive our own future. We drive the outcomes. We've started the process of aligning the existing permits that were issued in up through 2018-19 that were for the 50,000 ton per day operation. We've submitted modifications for many. We anticipate by the end of this year, we will have the permits needed to commence construction for the 15,000 ton per day. We've begun building a team in Australia. We're not going to manage this out of Denver. We're going to manage this out of Australia. We're developing a team of known and recognized mine builders, mine operators in Australia to manage this process going forward. And our goal, our objective is to be in a position this time next year to announce that we have commenced detailed engineering for the design of the project. This is a pathway that we think is very achievable. The permits already exist. These are simply modifications to permits. Our mine operating permit. The mine has gotten bigger because we've conducted 3 drill programs since 2018. The gold price has gone up. You'll all appreciate that the shape of the pit has changed. As a result, the waste rock dump is a little bit different. Fortunately, our tailing storage facilities are exactly the same size, and so there's no changes needed there. All of these things will lead to the commencement of what GR Engineering Services estimates to be a 27-month period from the start of detailed engineering until pouring the first gold bar. We hope to be in that position at this conference next year to talk about the start of detailed engineering and the start of that process. Just in summary, we've made some significant changes to the Mount Todd project. It's right-sized. And while we may not be at 50,000 tons a day to start with, the project will be expanded. But we're going to start it at a smaller scale, get it built, and then use cash flow to expand it at the appropriate time. And it's not possible for me to tell you what that expansion is going to look like today. The market will determine that at the time that we make that decision. Tremendous leverage to the price of gold. We're located right out beside the registration table. Stop by, visit with us, and I'll be happy to share more with you about Vista Gold and the Mount Todd Gold Project. Thank you.